Welcome to the Way of the Renaissance Man podcast and lifestyle website starring Jim Woods. We hope you enjoy this reprise interview of Jim with the Watch List on TD Ameritrade TV.
What are you thinking about Micron here after the bell today?
Well, before we talk about Micron, there's been a lot of stuff about drinking on the show in the last couple of segments. So I want to just convey my admiration for your admission of high school drinking there, Nicole. So I'm guilty of that as well. So.
No, those were the other people, Jim. That's what my friends used to get.
Same with me. It was all my friends, you know. Back to the issue at hand. So Micron up 53% year to date, which is fabulous. And that's outpaced the Philly Semiconductor Index. That's only up 36%. So what I think we need to see is some very good numbers in order for this chip stocks bull to keep running. Otherwise, it could be a cow chip on our hands as we go forward. I think one of the main things that we need to look at, of course, the revenue and the EPS, but I mean the bar is pretty low right now. Analysts are expecting like a plunge of 86% in the earnings to like 48 cents a share, and revenue is expected to come in down about 46% from last year, which to about 4.5 billion. So that's not a very high bar to make. And I if they don't make that, I'm going to be worried about the chip sector at large. Of course, Micron. Also going to be worried about the rest of the market because these stocks have been leading the way, and they're traditionally a bellwether for future gains. So
right.
I'm a little anxious about this.
Yeah, it's very interesting. So basically some lowered expectations. They better meet the bar. What kind of demand do you think that we're going to be seeing based on the current climate thus far?
Well, that's going to be the question I want answered as well, because remember last quarter the demand was down pretty heavily especially for the DRAM chips, which are the chips used in PCs and servers. 60% of Micron's revenue comes from the DRAMs, and the NAND chips were also like the flash memory and USB drives.
Yeah. Those
also declined something like 18% from the quarter, and the average selling prices were down in the teens for those, which is not good. So, like I said, the company is being optimistic in its outlook, but I think they have a lot to prove this quarter, and I want them to prove it. I'm rooting for them. I'm long some of the stocks in this sector, although I'm not long Micron. But
what names do you look at? I mean, do you look at Taiwan Semi or United Micro or AMD?
Well, yeah, that's Taiwan Semi has always been a good play, I think. However, my favorite stock in the sector is actually the equipment company like KLAC. I say KLA 10 core still because that's what we used to call it when I traded at a hedge fund.
I just called it KLA 10 core too. Yeah.
Yeah. That divulges our age a little bit here,
right.
But it'll always be the clacker as known on the trading floor. So.
Right. So you like that one in particular? Why that one? Because of the equipment part of it?
Yeah, the equipment. I mean, their earnings are doing well. Unlike Micron, their earnings are growing, heavily, and their price performance has been reflected in that. So they're kind of a holy grail combination of strong earnings growth and strong share price performance. So and because they're not tied to any one particular chip, they make they're like the kind of the company that supplies the chip makers. So I like them. And
it's also the partnerships too. I mean, some have better partnerships with the phone makers. Those are some of the things that we see. AMD, for example, would be another name. That's up nearly 60% this year.
Exactly, AMD. Yes, exactly. That's a perfect way of looking at it. I like the chip segment because I am bullish, generally speaking, on global growth and U.S. growth, and this is going to be this is a leading sector. But of course, when it comes to individual companies, we've got to see them execute. And like I said, I'm rooting for Micron. I hope they do well. One of the things I think that's going to be of concern here, and that I'm going to be watching as a kind of a bellwether for the general area. I've been writing about this to my newsletter subscribers at jimwoodsinvesting.com. What we need to see is if the trade war is actually hurting demand for these chips. Now, one way we can see that is by looking at China sales and also the Huawei sales. So I want to know when I'll be digging into this report a little bit in detail after the bell, because I need to know whether or not these things are this trade war is hurting. Now, we've seen some other companies that have reported trade war angst, and as the longer this goes on, the more the angst has a potential of hurting the bottom lines. And if it actually starts doing that, then I'm going to be starting to worry about this market in general.
All right, Jim Woods, a great discussion. I really appreciate it. I remembered what my friends drank in high school, wine coolers. That's what they drank, wine coolers.
Yes.
Jim Woods, editor of the Intelligence Report. Thanks for keeping the conversation intelligent. We appreciate that.
Thank you for listening to this reprise interview of Jim Woods with The Watch List on TD Ameritrade TV. For more great resources, please visit the website at wayoftherenaissanceman.com.